This is The Wealth Puzzle with Michael Mansfield from the Lynn Group. When a part of your financial strategy is out of tune, your long-term goals, your retirement savings, and your legacy can all suffer. With many years of experience in the financial industry, Michael provides his clients and prospects with the information they need regarding Social Security, retirement income planning, wealth management, and much more. Listen in as we address your financial concerns and provide helpful solutions to put you on the path to achieving your retirement goals. And now, here is The Wealth Puzzle with Michael Mansfield.
Hey everybody, thanks for tuning in. It's me, Mike. I'm back. You're probably surprised. The last couple of videos have been Tana and Owen. Gosh, I need to change my intro video because it only says my name, even though it has a picture of Tana. But hopefully you guys have been enjoying the content coming out from our Texas office with Tana and Owen. Really appreciate their energy in doing that. Obviously, Owen even wears the nice tie. Looks very credible and legit, so love that. But hey, happy Trump-iversary. I can't believe it's been a whole year since the administration's changed and we've had a new president. It's been a busy year. It's been a chaotic year. It's been an overwhelming year. There's been a lot of moving parts. And really what I wanted to focus on for today was touching on some of the things that I think are relevant to the work that I do, relevant to the things that I look at and the way that I help all of you, certainly, with managing your retirement plans. To that point, when we talk about politics, right, that can be an overwhelming conversation for a lot of people. I'm not going to focus on social issues. I know that we're all over the place on all of that stuff. Those aren't really my priorities, my concerns when it comes to the content of my work for all of you. To that point, just kind of a current event, I had a client ask the other day about some of this real estate stuff going on. So this is just kind of a small digression before I get into what I wanted to talk about. But Trump recently kind of signed an executive order saying, hey, we've noticed that a lot of these mega corporations are going across the United States, buying up single family residences as investment properties, turning them into rentals. And so he signed an executive order to try to control that quite a bit. And I thought that was a fascinating issue because it was met with a lot of skepticism. Oh, Trump's a meanie pants. Trump can't do that. All the things that are said about the guy. But then ironically, we had Governor Newsom come out in the State of the Union also this month and say the exact same thing. So it seems like both sides of the fence like that idea. So I'm not sure why he's getting so much flack. The other thing that he has proposed relative to real estate and this attempt to consider it and make it more affordable is he did just recently start some dialogue around the idea of using 401k, retirement money, being able to get it out for, paying for homes without having federal tax penalties. That is still just noise. There's no detail to it. There's really not a lot of content there. So as that rolls out, we'll talk about it more, but nothing we need to worry about for the moment. So let's talk about some stuff. Let's talk shop. Da-da-da. So let's look at what I got here. So first and foremost, right? Let's be shallow. Let's talk about the stock market because let's be fair. If we go in a time machine and we go back a whole year ago, there was a lot of noise, a lot of rhetoric. The stock market was going to crash. Everything was going to be problematic. And what has really happened? In the last 12 months, the S&P 500 is up about 15%. The NASDAQ is up just shy of 20%. The Dow is up 14%. So far, the stock market hasn't crashed. Is it volatile? Absolutely. I'll touch on that in a little bit. But net, we don't necessarily measure the stock market in short periods of time because that's just gambling. We're looking at it over periods of time. And so over the last 12 months since the new administration changed, the stock market is up pretty dramatically. I mean, it's up above what a historical average for an S&P 500 return would be. So we can check that off the list. The stock market did not crash immediately after the presidency change. The other thing that we were told is that we would enter a great recession, the economy would collapse because of all the negativity. Well, the way that the government shallowly measures recessions, now, don't worry, I know there's layers to this. We can talk about employment. We can talk about individual situations, different classes of people. Obviously, I can't drill down into all of these different sub-thoughts, and so we just have to really focus high level at the moment. High level at the moment is the government measures technical economic recessions by gross domestic product, GDP. You have to have 2 consecutive quarters of negative GDP to say that the country is in a recession. At the moment, GDP is accelerating. I mean, holy guacamole, it's the highest it's been in a long time. Third quarter GDP is at 4.4%. Like, what? We didn't have any GDPs over 4% in 2024. Coming into the year, we had a negative first quarter of GDP. And then we go to one of the websites I use. So obviously we can see that I'm just on all these different federal government websites for all the data points. But we go to GDP now. So the Atlanta Federal Reserve uses high frequency data to estimate GDP before it actually comes out. And right now, the fourth quarter estimates for GDP, wow, that highlighted everything, are 5.4%. I mean, holy cow, talk about an economy that is mathematically on fire. Once again, there's a lot of subsets here. There's a lot of social stuff going on. That's not really relevant to the concept of this math. And so the math is the math. GDP is on fire. The impending recession associated with the administration change has not happened. So we can kind of check that off the list for the moment. Unemployment, another variation in GDP. Honestly, something we've heard quite a bit about in the last 12 months. Unemployment was slowly ticking up, which it has. Obviously, it was in the high 3s. Now it's in the low 4s. It's at 4.4%. But here's the historical chart of unemployment in the United States going back, pre-1950. And what we can see on the chart, if we just kind of hover around the far right side, is it's at a historical low. In fact, the 50-year average in the United States for the unemployment rate is 5.1%. We are very well below historical averages of what is considered normal, healthy unemployment. And so I think that there's some, we'll say, undue criticism on what the unemployment rate is, how the labor market's doing. If this continues to tick up, obviously we're gonna have to change our tune over here. Obviously, we're gonna have to focus on what that means. But for the moment, we are well below historical averages historically when it comes to what a healthy unemployment rate is. And so that's doing pretty good. So we'll kind of check that off the list. What else has happened in the last 12 months? Well, holy cow, we got a giant piece of legislation, the one big beautiful bill. I'm on this article, the good, the bad, the ugly. So if you work with me, we're very hyper-focused on taxes. We spend a lot of time tax planning, looking at your tax rates, running the little calculators, estimating things. And so that's pretty interesting because when this bill came out, I'm using my updated tax software. We're having client meetings, and I can tell you handedly that 2 things have happened. One is nobody's taxes certainly went up. And a lot of people, certainly on the lower end of the income spectrum, dramatically had reduction in tax liability. And this is not an emotional thought. This is not a subjective thought. This is literal. I calculate this stuff regularly for people. Taxes are stable. Taxes are down. It's pretty wild. Now, once again, we can have a different debate on should taxes be lower for everybody. But remember, there's 2 sides to that coin. One say, hey, we need more tax revenue to help pay for fiscal issues with the federal government. And others say, by paying less taxes, people have more money to spend, therefore increasing GDP, creating more economy. So we'll see how that plays. So the tax legislation I personally view was a net positive for my clients. We'll decide down the road if it was a net positive for the country. But that then takes us to the next step. Well, how is the fiscal health of the government doing? Obviously, the government spends way too much money. Obviously, this has been a problem, not for this administration, but really for all administrations for 20 years. But there were some very fascinating things that shaped up last year. Thing one is we created tariff revenue, right? That was a very chaotic moment. There's a lot of pressure and stress associated with tariffs last year. But here's kind of the deficits year over year. This is obviously on the Treasury's website. And if I hover on 2024, the deficit was 1.83, 2025, 1.78. It rolled over at the end of the year. And what's fascinating about that is the fiscal year starts in October for the federal government. So even this 2024 number, it really started in October of 2023 and ran to October of 2024. And when Trump took office in January, the deficit was running like 300 billion higher than it should have been. And somehow the federal government last year closed that gap. We had 2 positive months, I think it was June and September, where we had a positive surplus with the Federal Reserve. We haven't had a positive monthly surplus at the Feds since like 2005. So some very weird financial trends shaping up. And, once again, year over year, we didn't, you can kind of see this chart's been just accelerating year over year. We had these 2 giant years for COVID, obviously. That's its own conversation. But if we eliminated 2020 and 2021, we had a pretty straight line of the deficit growing every year. And now all of a sudden it's kind of flatlined for the moment. We'll see what happens. But guess what? Current events. I can go to the top of this government website. And what this shows is it shows kind of where we're at year over year. And so what this is saying is since October of 2025, so that's when the new year started for the government, our deficit spending is at 600 billion. So that's a lot. No one's discounting that. We got to get this under control. But by comparison, from October of 2024 to now, we're at 700 billion. We're actually down 110 billion. We're down year over year with deficit spending by 15% at the moment. So we'll see what happens. But obviously, this isn't accelerating. This is just the math. This is just the literal data. The other thing that I wanted to touch on is the president is obviously a very visceral figure. He is very loud. He's very outspoken. He plays a lot of games, we'll say, in the media and on the news. But I think whether you love him or hate him, one of the things that you can give him credit for is probably what I would consider the power of the pivot. He pivots, right? He will change. He will adjust accordingly. For example, in the beginning of last year, when he came into office, this downtrend was Liberation Day, right? He announced all these tariffs. The market cratered very quickly, almost 20%. And I circled it, but he pivoted. He realized that this wasn't working. This wasn't effective. This wasn't helping the US. It wasn't helping the stock market, wasn't helping the things that motivate him. And so he put out a giant tweet that said, okay, just kidding. We're going to pause these tariffs. And the market skyrocketed. Fast forward to this time period right here in October that I highlighted. On a Friday, he announced some large tariffs on China because he was doing what he does best. Market crashes, that line straight down. On Sunday, he pivoted. He said, just kidding, realizing that that wasn't effective and working. And the market stabilized, went back higher. Then what just happened over really the last week is we got this very outlandish, aggressive stance on Greenland. Maybe we're going to use the military. Maybe we're going to invade. It felt very chaotic, very overwhelming. The market opens on Tuesday. The market essentially crashes. We have the worst day we've had in months. The market gaps down pretty hard. And then what does he do? He pivots, right? Yesterday he comes out and says, I was just joshing all you. We're not going to invade. We're not going to use military force. So at least we know that he is willing to pivot. He's willing to say, hey, is this effective? Is this working? Is this accomplishing my goal? Or do I need to figure out a different strategy? So like I said, it's very chaotic. It's very overwhelming. There's obviously a lot of moving parts here. The social issue is something completely different. The way that we want the rhetoric in our country is a completely different conversation. The things that we think are healthy, positive, and happy, those are all different. The goal of where my focus is how do I make unemotional, informed decisions for my client based on whoever the current administration is. I don't care that it's Trump. If it was Harris, if it was Biden, if it was DeSantis, if it's Newsom, it doesn't really matter. My job function is to look at the facts on the table, look at the data, and help my clients make decisions that can make sure that they are being appropriate with the things they're doing in their retirement. So obviously that we don't go broke, we don't have problems, and we mitigate risk. So anyways, hopefully this video isn't met with too much criticism. Like I said, I'm trying to be very unemotional and just point out really facts at this point. But in any case, if anybody has any questions, thoughts, concerns, curiosities, please reach out to us, 805-500-7035. And you can certainly visit our website, thelindgroup.com. Everybody have a great day.